What's up, everyone? It is 2026. We just wrapped up our first TrendForce training for the year, and it is loaded. Two huge announcements in here. The one at the end is the biggest shift that we have ever made as a community, and I can't wait for you to hear all about it. In the middle, though, Dad gave an amazing training on rejection of a level or rejection of a line, what happens after price rejects certain key levels. So loads of value in this one, guys, and I cannot wait for you to hear about this announcement at the end. It's going to be amazing. Anyway, we'll see you on the inside. Welcome, everyone. It is 2026. We are back for Tuesday night training, and tonight is definitely extra special. We've had a good few weeks off, and, well, in some sense, well, Dad and I haven't, I'll put it that way. We've been working. But anyway, all that to say, we're back, and we've got loads to share with you. So, got a full training in store. Dad's got loads he's going to be sharing, and we're going to save our fairly epic announcement till the end. I've got a small one, at least, to begin with. So, aside from all the other things coming later, also wrote a book over the holidays. So nothing too major, nothing too crazy, about 47 odd pages. And it's geared towards guys in the beginning of their trading. So that's what the cover's looking like. No one has this yet. It is going to be dropping pretty soon. You guys will definitely be able to read it. I can't wait to get your feedback on it. And there's, well, to give you context of what it looks like on the inside, it's pretty massive. So there's a lot in there. That's all you're going to see for now. But the rest of it's coming soon. Loads of fun stuff in there. Just dealing with the 9 lies that are taught, the 9 lies that we might believe, different expectations, different beliefs, different mindsets coming into the world of trading. So some real cool things in there, little snippets from things that have been taught over the years by us and others and etc. that we're lacing together to bring some cohesion with. But anyway, just a really cool resource that we wanted to create. So there's that. And then the major one we'll save till the end. There is definitely something big coming, but I don't want to waffle anymore. I know Dad has put a bunch of effort into a real high-level training tonight, something that we've both been very aware of for years and is critical for understanding how price moves. So tonight is, I'm not even going to label it because I know he might even just give it a little twist. So Dad, I'm going to pin you for the first time for 2026. So cool to see stacked out house of everyone. Oh, there we go. Kiwi, gotcha, and add pin. There you are.
Boom, here I am. Well, Happy New Year. Thanks for the greetings. And gee, it's been weird not having our regular trainings and Zooms. Thanks for the wave, Mark, all the way from the Netherlands. We really do miss you guys. It's so nice seeing all your faces again, logging on, and some I've got to see on the cameras. So good. I love community. That's the one thing I enjoyed about trading, is being part of a community. So yes, we are so amped and excited for what we're going to talk about later. But we are going to do some training in the meanwhile. So I'm thinking with where we're headed, I'm thinking now, what are the most important things we can teach? So what I'm going to give training on tonight, it's obviously things we've mentioned before, but what I'm teaching tonight is going to become a huge foundation for where we're headed. And so you could call it many names. I mean, if you wanted a heading, you can call it rejecting a level. All right, so trading obviously always has key levels in. And, and what makes a trade safe is how price reacts at key levels. And so I'm going to map out some of them tonight. And in the future, there are going to be a few more we're going to introduce. But what I always look at is, before I take a trade, has price rejected a level? I mean, my journey, let me just share my screen. Can I just click share and see if I can get the right one? So we are up and running. Look at this nice trade here. Price fell off a cliff. That dropped all the way down 200 pips tonight. What a trade. Anyway, so part of my journey is, if we just look at this bear chart here, you can see why did price go from there and move up? Why did it go from there and move down? There's a high, all these highs and lows. What caused price to move down from there? What made it move up from there? Well, what we're doing and creating, it's going to answer all those questions. So I am so excited with what we're working on. Really, never been more excited in all my life. I've been sending all these photos. But the key thing tonight I want to talk about is rejecting a level. So let me get back on track. What I always look for is rejecting a level. And one of the words we're going to start using a lot moving forward from next month is confluence. We look for confluence before we enter a trade. So confluence really is just the name that is there confirmation for the trade you're going to take. So I just want to look at that example from last Saturday. I want to go to the 2 trades I took last Saturday, which were on the 10th, just as a foundation, and then we're going to get into more details. So is it going to take me, it's trying to move me to the 10th, of course, when you're live. So where are we now? Yeah, we are on the 10th. So let's have a look at two trades I took. So this is firstly the Dow trade. So if we look, I posted these pictures, what made me take this trade? There wasn't a buy signal or a counter trend signal. So look, I want to tell you where we're going is we are going to look carefully at how price reacts at key levels. And that is because that opens up a whole lot more pips. We are leaving too much on the table. And so where we're going, there are going to be a lot more opportunities to trade. Talk about that at the end. But what drew my attention to this trade? And so there were a number of things. So we can see this is the US 30, and this was, around 729. I entered, I think, a bit later on this trade. I can't remember, it was around about here. Let me see what I needed. Let me just put on the playback feature. So I want to just walk through this quickly, replay. And let me just I'll put it here so we can just look back, but get some more detail, just see what else was going on here. So if we look at this trade, why do you think I took this trade over here? Well, there was three things were happening. And I don't know if I put all the notes, I didn't look back on the feed. But where you see confluence or a cluster of a key level, so you can see what's happening here. There are three things that gave me confidence to enter this trade. Number one, we can see we rejected a level. The 233 is one of the most important moving averages, I believe, in trading. So we didn't break and close on a run below. So we rejected the 233. Also the R4, the pivots. We can see price tested and also rejected the R4 pivot. And thirdly, because they're almost on the same line, it often happens, we can see here is the M15 opening range resistance line. So that's there was a lot of confluence. There was a lot of confirmation that price was going to move up. So I was tracking this trade, watching it, seeing what price was doing. But as soon as we rejected that level, my finger was on the trigger and my entry point was over here because I was waiting for more confirmation because obviously it didn't meet the rules. But where we're going, the rules are going to change. I'll give you a little hint. It's going to be way, way easier. So I entered on this candle because on this candle here, we can see down in the MACD, we had triangle up, which stands for reverse re-enter, plus the MACD went bright green. So I think that is my entry point, and I took 35 pips. I think I trailed my stop up. Yep. So what I did was I entered, and then once I had a white candle, I trailed my stop. And we can see I got stopped out around about over there. So that is my entry on that candle. And then I trailed my stops. So you can see where my 35 or 36 pips came from was basically around there. So that was where we headed. Always be looking for when you get a cluster of key levels, and that validated that trade. Then if we look at the NASDAQ, just press arrow down on your keyboard, and that should take us to the NAS. And why did I take this trade? This trade I got 50 pips. So let's wait for things to reload. We can see here again, what drew my attention was I was watching two screens at the same time. I don't always advise that, but I had this on my monitor. I saw price come down, and then I started seeing all these dojis. Look here, doji, all these dojis. So, I mean, there were the two bearish candles. And then there was one bearish candle there, but basically for almost 16, 17 minutes, there were a group of dojis. And why were they there? Well, they were testing a key level. We can see again, we have a pivot. R4 was there. Plus we can see there was a previous support zone that price was rejecting. So that really drew my attention in that trade. Plus, of course, we pulled back into the 8 times higher zone. And these zones work as liquidity. And so immediately I thought this is a massive rejection. There's confluence. There's not just one thing price rejected, but there's 3 levels that price has rejected. And so again, I entered that trade, I think at 729 on this candle. And the confirmation I looked for, besides buy momentum, and it was bright, meaning a strong buy momentum. Now this broke the rules, but again, the rules are going to change because there's a lot more opportunities we're missing out on. And that's my research. But we can see again, it was the same as on the Dow. There was triangle up. It may not be too clear on the Zoom. Triangle up plus the histogram went bright. So I entered that trade. And then also once white candle plotted, I started chasing. Hold it. Let me just go a few more bars here. But this trade went a bit longer. I'll just click a few more bars. Yep. Let me just stop that there. Stop. Ka-ching. There we go. And so that was my entry candle. There were three signals in the same candle. So again, bright by momentum, triangle up on bright histogram. I entered there and then I waited for the white candle. And then I just trailed my stop loss up and I just kept trailing it until I got stopped out for, you can see exactly where I got stopped out because my stop was below that candle. And that's where I got exactly 50 pips. And I'm glad I took that. I'm glad I took those pips. So again, what made that significant was that this had multiple rejections of a key level. Remember, R4, whether it's weekly, daily, monthly, S4, R4, S3, R3, those are the key pivots we look at for price action. And so again, rejection of a key level, and then we had three signals on one candle. I thought, even if it doesn't go the whole way, I'm going to get into a risk-free position purely based on what happens here. And I remember I once used an illustration when I was talking about support and resistance about bouncing a golf ball. And often I take my grandkids down to the beach and I'm trying to teach them golf. Of course, the irons are way too long for them, but they still have fun. It's hit and miss. But if you dropped a golf ball on the beach, on beach sand, it's not going to bounce at all. If you dropped it on the carpet, it may have a small bounce. But if outside I've got a long concrete driveway, if I drop that golf ball on concrete, it's going to bounce really high. It's going to really soar. And so key levels, I always think of them. I always think of a golf ball on concrete. This, in a sense, was a golf ball falling on concrete that was highly likely to move up. It happened again. I took a trade this last Saturday where it was going sideways. It was not quite as level as this, but it was going sideways for, I don't know, half an hour longer. And then eventually it broke out. I knew it was going to travel. I think I got 40 pips or so. I can't remember exactly. No, that's when I just grabbed 20. But it also had a similar thing, bouncing off a level, then moving. So again, look for this, especially when you see price struggling, testing for quarter of an hour. When you get the first bullish candle, that's a really good example, that a good indication you got Confluence, price is going to rise. So moving forward, I'm always looking before I enter a trade, has price rejected a key level? So let me turn the timer off here. Let me just go, let's leave and let's go back to the Dow. And we're going to take a look at some stuff here. I'm probably not going to use the MACD. I'm just going to turn it off for now. I'm not going to need it. So where do we start? I'm just going to look at, maybe look at 8 things very quickly. So where does it start? Well, I haven't pre-drawn this chart up. Let me turn off the... So the first thing I always do, you know my method, is the foundation is always, I always turn to a 4-hour chart. And I sometimes, flick between the weekly because key levels are established here. Now, I want to say, because of where we're going and what I've learned and other strong indications, I've changed some of my key levels to the daily. So I firstly click it on the daily. And in the daily, I'm looking simply on the daily for key highs and lows, recent ones, because price, we're a long way from, that August low. So I'm looking, where are the last significant highs and lows, and then I will draw some lines in. So for example, let me just cancel that one. Delete. I've got to change my colors. I'm looking for this horizontal ray. So here obviously was a key low. So I plot that. Oh, it's come out the right color. Then I'm going to draw another key low. Let me just clone that. We can see price pullback. I'm going to put another one there. And this is very quickly how I draw my charts now. Another clone. We want key levels. Okay, so there are 3 key support levels on the daily chart. Then also we want to put in some resistance levels. So let me just clone this quickly. Clone, drag it across. Every high and every low on a daily chart. Let me turn the magnet on for now. And that color I like to change to that red. There was a key high, clone. That was the next key high, clone that. So they already are, that's the next high. So that's very briefly, these are key areas. The main big highs, I mean, you could add those in if you want, but those are the key areas, key highs and lows. So if you turn to one, this will get very crowded. And then of course, what I always do is I look for the last big low to draw a 4-hour fib. And this one's still valid. The last big low was way down here. So here I draw my daily fib and I take it up to the first pullback, which is there. And now this will get noisy. This I change to 4 just so I know what it is. So that's basically the key levels that I've drawn now on the daily. Now, if we went to a 1 minute, initially it's going to look a bit noisy, reset. Then what you can do is you can see, let's just make it a 3-minute chart for now, just so you can get more information. We can see again, look here. For example, look at this. This is what we drew, this key resistance point. Just look at this, how price has tested this level. Sometimes it's not always exact, but there's an exact rejection. Price moves. Here again, key level, price rejects, moves up. Here again, key rejection, price moves up, didn't make it quite there. When price breaks below a level like that, then it always drops. It's kind of been retesting that key level, breaks below, falls off a cliff. Now, obviously, the fibs don't often show, but let's just crunch it up some more. And if we just go back, we can see again, look at these key levels. We can see here's another previous high. Look at that. Price kind of tested that zone after it rejected that zone. I mean, look, it moved up, 600 pips. If we move back, we can see, look at this, to the millimeter. Price tested that previous high we drew. This is what you got to get used to. So whatever you draw, you should be able to go back and see price. Yeah, look, price is testing this fib level. And we could go back and we could test some more. So let's just go back to the 4-hour chart. We'll just add in a few more layers. Let's reset our chart view. So we can see how price was testing these lines I drew then. What I do on the 4-hour chart, I look back and do the latest fib. I go to the latest low. There was the latest low, and then I draw another fib there. And I draw it up to the first big pullback, which is there. And of course, I'm going to change that to 1 thickness. And that gives us some more key levels. Even looking here, we can see how price reacts to these different fib levels. So if we just went back quickly, let's just do a 3-minute chart and see, look at this. We can see how valuable these key levels are. Look, for example, over here, we can see how price has tested this fib level multiple times, tested it there, rejected it and dropped, tested the level, rejected and dropped. And we can see right now, where's price sitting around the 0.5, the 50%. That's how that trade moved. If you look back again, we can see over and over key levels, reject, move. And so that's why it's important to draw up. I would never trade without drawing up a chart like this. I'm just looking back if there's some more examples. Obviously, the other levels we can draw, we can see around the 230 mark, rejections. But if you went back over time, you can see multiple times. We can see here, look, we got our daily resistance line we drew. Price test, breaks through once, retests it, moves up, comes to a fib, breaks through. We can see multiple retests. Only a fib level could explain that. And so I know it looks very busy when you are drawing the charts up. Then, of course, we also draw trend lines. I'm not going to draw all of those. We're not going to do those now. So I'll draw some. This would be on a daily. Let me just go back and well, look at this price. What stopped this trade? Look here. So let's just go to the daily for this one. Well, we can see here this daily trend line. Price is sitting. We can see there's a mark. I'd like to make these yellow. Let's just change the color to yellow for daily. So I've just drawn one quick trend line. I mean, obviously I would draw more. I'd also, if I was drawing my daily, I'd take this high, and you can see multiple, may not be too clear on the chart, but we'll zoom back to the 3-minute. But we can see here, this is a very significant trend line. Look at price has tested those levels numerous times. But right now, price had this huge 200 pip drop. What stopped it, if we had our trend lines drawn correctly, let's just go to zoom back to the 3-minute, and we can see now price is now around this trend line. I mean, it's not too accurate on the 3-minute, but again, price broke it there and has fallen. And so that's the basic backdrop that I use for drawing up the basic grid. I go to that 4-hour chart, and then I draw in all those key levels. I draw fibs, a 4-hour fib, a daily fib, and then I'm also putting we don't want to drag this pot. We all know this very well, but I would have had a 4-hour trend line, would have already plotted from here to here, and we can see our price, and that would be white. So I'll make my 4-hour trend lines white. So we can see again from these two lows here and a higher low, look at the activity around this trend line. So you can see a lot of activity. Price broke around 4 o'clock this afternoon, and then obviously breaking of a trend line always accelerates price. So it's broken that support trend line, and that's part of the reason why there was such a huge move. You can see now, although we're on a 4-hour chart, what has stopped price going lower at the moment, it's this 0.5. It's this fib we've drawn. So you should be able to just draw a basic chart like this and then go to a lower time frame. And if you've drawn it accurately, you can see our price was, this trend line was just drawn in. Look at this price action here. And again over here and over here, over here. Look at this. We did this on a 4-hour chart, but it's really showing us exactly what price is doing. So this is the big picture, is having these lines drawn on a 4-hour chart. So let's just maybe pop back to a 1 minute. And what are we on now? Yes, no, we're on the 1 minute. We're right there. So obviously there are other things. So let's turn our indicator back on. So we're doing well for time. Obviously the other key one is our pivots. So in fact, let me turn the indicator off and let's just put on those key pivots. So let those load. We can see here again, price action. So we can see sometimes they fly through if there's acceleration. So here's S3, that's normally quite a key pivot. No action there. But look as you move down, what caused this drop to hiccup? It came, it tried to break through S4 weekly, pulled back slightly, then it broke through twice, pulled back, retested, and down it went. Where did it end? Well, around S4. So if we just look back, let's 3 minutes will just give us more information in the screen. If you look back at just some of those key pivots, you'll often find where there are highs and lows, where prices move. Now, there's other things we're going to learn. We can see here, there's some action around that pivot. And some we can see here, look at this, price rejected that pivot. We can see a bit of a head and shoulders. If we just look at a bit of price action here quickly, head and shoulders, we can see trend line. We can see here, price rejected a key pivot, broke a trend line. Even if you entered late and your target was the next pivot, you can almost trade. Let me turn the magnet off. We can see, for example, here price breaks below there. There was 75 pips just in that trade. Just pivots alone could tell you that that was going to be a good trade with a bit of price action. Again, you can see every time there are these pivots, you look at the price action here. A lot of tests, eventually price breaks above, shoots up. That would have been at the open, retest, and down we go. So again, if you just look at the key pivots, look at this. Here's classic price action. Here, price comes down, looking at nothing else. Price rejects a key pivot, and there's 78 pips. So I won't spend too much time. I think you know pivots well by now. But you can see the reason why we have them. That move almost ended there, over and over. Again, sometimes you get a cluster when they're grouped together. You can get condensed, price action. Look, here's two riding over each other, and price spent some time there. So those are our pivots. Then, of course, if we let's look at the POC. We put the indicator back on. And we'll go to, what have we got? Oh, sorry, wrong ending. We'll come back to that in a minute. Let's turn the POC on. Let's look at this trade that dropped through the roof here tonight. Fell off a cliff, as they say. So we can see here that price, if it may have been clearer on the POC may have moved. So let me just move the replay closer to the entry and see where the POC was. On the 1 minute, as I looked earlier, I think it was really close. We can see how the POC, look here. If you were reluctant about entering this trade because on the sell signal was right on the POC, we can see, look at this, for the POC is always a key level. This, looking back here, look here, price tried to break below, rejected it, and moved up. Then price comes down to the POC, rejects the VAH, value area high, which also is a key level. You can take trades because price always returns to the mean. So where we headed, this would be clearer, but already there was a quick, 14 pips if you wanted to grab a quick steal. We haven't taught that a lot now, but where we headed, there's a lot of trades just getting back to the mean. So we can see here, look at the POC, what a key level it is. That when the more or less close to the open of the trade, price comes down, tests, rejects, tests, breaks below. And once it broke below the POC, there was that huge move down that eventually went for 200 pips. So keep an eye on the POC as well as the VAH, value area high, and value area low. Remember, when price is trading between the VAH and VAL, that the price, it's said to the market's in balance. Once it breaks below, it's out of balance. We love out of balance. When price breaks below, we did a whole trading on this, then price can really rocket down. So even if you waited for a break below, you could have taken, that signal. We've closed below a previous support zone. And worst case scenario, look, these levels count all day. This M15, the 15-minute, this is the support line. These are all day. You can see our price hesitated around the support line. When it broke, we got that signal. So even if you waited for this little explosion to plot, let's just turn off the replay. Exit. Already getting ahead of myself. That was one of my points. But we can see even if you waited for that signal, you're hesitant from there down to the bottom of the trade, 162 pips. So again, the POC is a really, really key level. And of course, now it's moved because I've let the trade run to where it is now. So look for the POC, very, very important. And of course, also our moving averages, especially, the 233. Once price breaks below the 233, it's often a key area that is going to fall. So if we just look back, haven't been looking at, we look for rejections like here, look at this. This is what you've got to be looking for all the time. It's subtle, but here, can you see price breaks below the 233 and it retests exactly. There's 3 candles that's hanging around. Once it breaks below, it does retest this trend line we drew. You can see this is such classic. Let me just bring this to the front so you can see visual order, bring to front. You can see, look at this. We drew this line on a 4-hour chart. Remember, we drew this earlier, and look at this classic price is testing 1, 2, 3, 4, 5 minutes. There's 5 dojis where price is largely testing this trend line. Then when it broke, was a key level, price dropped 35 pips. So if you look at a price action around, the 987 and the 2584 are far away at the moment, not sure where they're hiding. We didn't quite reach it there. But whenever there's rejection of key lines, often they become support and resistance. Now here's another classic one, similar to the trade I took. Look here. Here we got a bit of a cluster. We can see price, not only is it getting liquidity from 8 times higher, but it's rejecting. Look, this double test of the 233. Plus, we can see we got a fib level here from our 4-hour chart. It's rejected it twice. So sorry, a little double bottom there, but we got a cluster. There's Confluence, and after that, obviously there's a pullback. Where we're going, there'll be other safety, but there's a good 70 pips in that move. So look for the EMAs. We can see there's often a test of the 233, break above, rejection, and then up we go. But if you look back, you will see that a lot of trades. Look at the 233 here. If you're nervous about this counter trend, you could have waited until it came to the 233. That could have been your target. And then look at this. We can see again, it tried to break below there. Big doji for the retest, and then bright candle, and price drops off a cliff. So again, the 2 trades, one of the trades I took, or both of them, I think, or one was around the 233 rejection. I'm trying to see, our 987 is there was a big fall, so we're not going to get that in view very quickly. Let's just see if we can find where the last 9, let's just see if we can find, okay, here we can see, this is a big sign. If you look at where this trade went, look here, price, this 987 is massive too. We can see if I was looking at trades here, here's a rejection of the 987, and obviously that there was a 55 pip trade there. Whenever you get big candles, by the way, there's always a quick pullback. So whenever there's big candles, I'm chasing my stop loss, all the time up the candles. But here we can see, look at the 987. The key, it tested it multiple times. How it first touched there, tested it for 17 minutes. And when you get a buy signal after a rejection, And again, Confluence, we also tapped into liquidity on the 8 times higher, off it went. But this would have interested me, this trade, because when price starts breaking below the 987 after multiple tests, and it's broken below the 233, it hadn't done it effectively, then there was a retest. Those lead to massive downward trends. If we just crunch this up, I mean, where did price go? I mean, that obviously was a gap in the market there, but you can see once price rejects the 987, price, it couldn't break above it for how long? I mean, I'm just scrolling. It hasn't yet broken above it from that retest. So again, we've got the 987, the 2584 is out of view, the 233, so the more high time frames are absolutely key levels. So when you see price testing and rejecting those kind of moving averages, expect moves. So I'm looking for those two. Then of course, trend lines, I've already covered that. We can see how I mentioned this trend line, multiple tests before this break over here. We can see this reversal up. What stopped it there was the trend line. Even when there was a buy signal, it broke above, and then of course it retested. I mean, how many pips? Not a big trade. Also, okay, only 10 pips. We're in low volume time. But again, here we look at this. We broke the trend line, and then a good move down. And here with this big move, this recent move this evening, okay, we're way below it. But again, once you break a trend line from a 4-hour chart, always expect to move down. It may not always be immediate, but again, this big move, part of the factors, we rejected the 987. We also rejected this level, that trend line. So look for trend lines. And then I've covered the fib retracements. We can see, I've mentioned those already, how price rejects those levels, those key levels. So I'm always looking for where the fibs are. And what key levels they produce. And then lastly, before I hand back to Ty, of course, big round numbers. Okay, here we can see this break below a big round number. So we can see as 48,900. We can see there wasn't a lot of retests, but again, when you get a sell signal that plots below a big round number, that can be a sign price is going to move. It was tested here, so we can see 48,900. A key level, big round number, mainly that chop was because of the big round number. If we can look here again, we can see this big reversal, price breaks above 48,900. Then there's a bit of a retest, and then eventually you get a counter trend signal and price moves on. But I'm always looking, big reversal, what stopped it, big round number, look at that activity. So when you get a lot of chop around a big round number, then when you get a nice bullish candle breaking above, there's often a safe trade. So this one, bolted up, there was 30 pips there. So obviously they don't plot back indefinitely. We can increase that, but I'm looking for big round numbers. Then the other key thing is sessions. So, I mean, there is the main sessions indicator that Ty uses. I'm working on one. I mean, it's still a work in progress, but if I turned off the main indicator, and let me just hide all the other drawings, so we just got a blank chart. If I turned on the highs and lows of the major international trading sessions, let's see what it tells us. So we can see here, look at this. This is the New York low from this morning's trading. Price comes down. You can see there's hesitation around that low. Once it breaks, price falls off a cliff. If we just scroll back, we can see, look here, this is, what time is this of the day? This is now lunchtime. This is 13:35. Price comes back. What does it come back to? Comes back to the New York low. And after that, rejecting that low, price moves up, let's call that 70 pips. If you just scroll back, you can see, look at this move down here. Price rejects. I've still got my pivots on. Price rejects a pivot. Where does it come down to? This is now the Tokyo low. Look there, triple bottom. It tests it there, rejects it, comes down, retests the Tokyo low. What happens after rejecting the Tokyo low up to the pivot? There's 90 pips, comes back down, comes back to the Tokyo low. And so again, I'm always looking at these levels when I'm trading. So if we just scroll back, we can see what other levels we can see again. Tokyo low, the Asia market can be quite significant. I mean, this is Sydney. Almost want to leave it off, not that significant. But as you go back, you can see, I mean, this is live. The dots are live. Let's just have a look back at a few more. You can see what we can find. That's a Sydney level, not always significant. Also look where the London closes too can be very significant. So I often look at the London close while I'm trading. This is now in the evening. We'll go back a little bit more. But you'd be surprised that often these levels, that would have been the Sydney high closing there. This is during the day, so not a lot of activity. But again, you can see this is the London close. Often this is the New York is still open. The London closes at 6 a.m. our time at the moment in New Zealand. But you can see how significant the London close was. Retest when it breaks the London low. Finally, there's a big drop. So again, look at sessions. And also, I think I've covered the opening range. I just mentioned that now. Let's turn off sessions, the last one. Before I hand back to Ty, let's just get back to where we were. So reset chart view, maybe a bit messy. We can see here again that these sessions are relevant all day. So if we look here, we can see here how key price came down to the 15-minute low of the day. If we just plot it, because I'm saving space, if I just extended these lines as white dotted lines, let's just see. If we just went back, turn off the indicator now, and let's just see, look here. This is 2 o'clock. Price comes up. Where does it come to? It comes to the 15-minute resistance line, makes a double top, comes up, look here. This is why we got this in the indicator. We can see here all the way, this is the 15-minute resistance line, rejects it, drop. Where does it go to? The 15-minute support line. Rejects that, moves up. How many pips? Let me tell you, I've got the magnet off. So from there to there goes back up to that level. There's 60 pips. Makes a double top, comes down, doesn't reach it again. But interesting, throughout the day, look at this. These highs here, this is the 15-minute resistance line. Look at this. What time is this? This is still in the morning. This was obviously at the open. So that was created then. But you can see again how significant those lines are. So we're talking about clusters and Confluence. So again, this trade here, 1336. There's a cluster here. We've got a previous, this is a daily high resistance line, key level, plus it also rejects our 15-minute demand line, our 15-minute support, and up price goes 62 pips. So again, when you see things together, we've got Confluence, and they then give us a greater safety and greater confirmation to enter a trade. So Ty, I think I'll leave it there and stop share for now. And I've got to find my stop share button.
Find the button.
There we go. Stop share.
There we go. Well, you can stay on there. Hopefully, I'm pretty sure we're both still pinned. And we can, yeah, I think we are. Cool. Well, guys, what a turnout tonight. I mean, if I flick to gallery mode for a second, like we are absolutely stacked. So good to see a bunch of you. You can see some of your faces. But that was awesome. Thank you, Dad. Rejection of a level, rejection of a line. That is very, very, very relevant for all things we've ever done and everything we'll ever do in the past. And so, guys, this announcement is a little crazy for you to comprehend in the sense of, how much effort and work has gone into each and every update that we've ever had. But I'll share a tiny bit of story and I'll get Dad to expand on it. So I want to say about 18 months, Dad can correct me, he saw basically a vision of something, these levels on a chart sort of above and below price. And his side project has been figuring out what the heck he saw. Like not in real, like, I mean, vision as in like in his mind from the Lord, and hasn't been like, basically went on a journey trying to figure out what it is, then finding out what it is, figuring out how to code it. And in the process of that, I chatted a lot with him about things I know as well from the market and from history. And I've always had this deep conviction that the order books, the order flow, the way that big money places their orders at certain levels was something critical for us to look into and figure out. And there are lots of different traders and people out there that utilize elements of order books and order flow and things. There's some guys out there using all sorts of funky bubbles and whatnot. But aside from that, I just knew that price and orders are kind of two different worlds. And so to cut a longer story as short as possible, to give you guys some context, everything we've ever built has been, moving average based, so to speak, and is interpreting price action. And price action, the way that we all trade, it's the way we've always traded, but we've always known that there was something else for us. And so considering the amount of effort that went into, reproducing all the resources for something like a version 4, you can just imagine how hesitant I am to even consider something like something else. And I'll put it this way, this is not even a version 5. This is something entirely different. So I'll let Dad expand on that, but it will mean still me making a ton of resources to go with it. But this is something very, very significant. And I mean, to quote Dad, I probably got this backwards, but it's going to present like 3 times the opportunities and be twice as easy. And the day after he said that to me, I happened to be making some eggs for the family, and I thought this was crazy because then, I don't know if this will come out, but cracked some eggs, and I had like 3 double yolks all in there all at once. I was like, all right, this is what we're supposed to be doing. And so it's still weeks away. Like, we still got lots of work to do, but I'm going to let Dad share a little bit more, because what started as a vision about 18 months ago and been a very methodical side project, aside from all things TrendForce all the way through to version 4, this is something different. This is not a version 5, but this is an extremely phenomenal way to trade. And so, Dad, your turn. I'm sure I got everyone frothing at this point.
No, you've
without
kind of
giving
said
away
all,
too much.
I mean, my deep search has been, how we've developed, TrendForce so far. My deep search has been, why did price stop there? But more than why did price start there? So I thought, what stopped that trade going further? And I never really looked at the origins. And so everything I've developed has been, obviously support and resistance levels, things I'm talking about, but I didn't really dig deep enough into what actually starts price when you have these big moves. And I was puzzled because everything we were taught by our mentors never really addressed what initiated price. Now, I've shown some things tonight, but what I've got into is way bigger. So tonight is just scratching the surface with how price moves. And as Star said, it was about 18 months ago, I had this vision of these bands. And especially, it showed me when a trade was ending, big moves, and both for sells and buys. And I've been trying for 18 months. Every now and then I'd try working it, and it got me nowhere. I mean, I can list all the things I tried, but eventually in the last kind of 3 months, it kind of came together where the core is not something I've invented, but I've shaped the bands out of this key thing we're going to get into at the end of February. And once I did that, like, the penny dropped. And it's just absolutely crazy. So, because things puzzle me. I mean, everything we've been taught from our mentors and how we've shaped this is still true. The safest way is to trade with trend. But then sometimes I'd get puzzled because I would see price start at a random level, and these perfect, let's say, bullish candles would plot one after the other, and it would be on the wrong side of the 233. The SMA 21 was sloped down where price was going up, and it seemed to have no effect on price. And so some things always puzzled me. And so I've been on a very, very deep dive into, price action, what causes the big moves. And I've realized it's where big money place their orders is where price moves. And so largely what we've been building, it still works great. I mean, it's cutting edge for price action, but there's another layer we're going to add. So it's not just, often we talk about, there's an update. We were in version 1, we updated to version 2, we updated to version 3, we updated to version 4. This is not version 5. This is not an update. This is like re-engineering a transformation in trading. I mean, my desire is to have the best indicator in the world. I believe, not all of us are spiritual, but I believe, with God's help and revelation from heaven, that we can produce something that will create wealth for people. That is, I've said often, I don't need the money. I've been blessed. I can retire. I don't have to do anything. But I have a passion to see people become debt free like I am, to create wealth and to get out the 9-to-5 syndrome. And I mean, that's the journey we've been on. Honestly, that is my motivation. I don't need to do this, but I believe God has given me divine inspiration. I mean, I'm 65 and I'm coding advanced, even more advanced stuff I've been busy with in the last few months. It's gone to a whole nother level. And so we are very, very excited. So look, there's no need to panic. Everything we've taught you is good. I mean, I messaged her this is going back 3 weeks. Like on the Dow, this was on Saturday the 3rd. There were 13 trades. If you took every single signal, we got a new, everything's new. There were 10 wins, 3 losses. 9 out of the 10 wins hit TP3. The total pips were 1,001. The wins were 1,139. The losses were 139. Net pips was 1,000. And that was taking every single signal with what we're developing. I mean, I just keep sending Ty these pics. There's crazy. I think I think I've cracked the code. I honestly believe I've cracked the code of trading. And look, it's still 6 weeks away. So we're going to soldier on with version 4. I'm like 99%, well, 90% finished with where we're going, but it's going to create a lot more opportunity. Even this last Saturday, there were, I think there were 9 trades you could have taken. 8 were winners. There's only one, and there was a good reason not to take the one. But if you took every single one based on the strategy we're working on, you would have won 8 out of 9 trades. Every trade had 40 pips. So we're talking about a lot of pips, and also the mystery of these huge moves. I've solved how these big moves work. And so, I mean, I've double tested. I mean, every week there's at least between 1 and 2, 150 to 300 pip moves that you can capture, understanding what we're developing. And so you only need 2 screens. I'll tell you that in advance. But I tell you, this is going to be phenomenal. When you see it, initially a little bit of a shock. And I'm setting up so you can transition there. You can click on a bit of the old. It'll look slightly different, apply all the rules. So once we release a new indicator at the end of February, don't panic, because some of the old will be there quite clearly. Follow the old rules, but soon you want to ditch it once you catch this new thing. So I don't have said enough or too much, but seriously.
No, we're good. It's fine.
I'm very, very excited. I'll hand back to you.
I mean, well, I know everyone's probably just buzzing in the background, but yeah, zero reason to panic about anything, guys. This is something fresh, and I'm just going to quote Dad what he's been saying to me. He's never seen anything like this, and I've never seen anything like this anywhere in all the years of doing this and scout. Like, I mean, flying all over the world, learning from all sorts of different people, all sorts of different whatevers, and in all of our digging and searching, and I mean, 18 months worth of looking for what he saw in his mind. No one's done this. And it is profound. Like, I remember hearing guys say they've been doing this for 20 years. The opportunity of, what did they say? The opportunity of a lifetime shows up in the charts once every 2 weeks. Well, it's weekly. and this thing shows it. So it is different, but it is smoother. It is simpler. We are able to chop so much stuff out of it. Is going to be the cleanest chart we've ever had. That's for sure. So we're very excited, to say the least. So much so that I even agreed to, obviously, all the extra mountain of work that I'm going to have with this. But I mean, that's what I love doing. I love being able to create resources that are going to empower people to be able to crush it. So timing wise, please, this is the tension. I know as soon as we announce something like this, everyone suddenly wants it tomorrow, but we wanted to let you in on it because we are going to plan a live event around it. I don't think it'll even be open to the public. This will be so we can just spend a bunch of time together and really take you guys through the transition.
We'll do it on a Saturday, a longer event.
Yeah, possibly like a longer Saturday kind of a thing, hang out, have some lunch, and then do a whole afternoon type of thing together. So,
but the truth is, this is so much more simpler. It is, when you see it and you understand it, it is way, way simpler. Trading like this, way simpler.
So we're toying with dates. We will confirm this. Don't hold us to this, but potentially looking at like the 28th of Feb, potentially. So that's like the end of, I mean, it's like whatever, 5 weeks away. So that's what we're toying with. So that means, at least for now, I mean, yeah, don't book any flights just yet, but we will hopefully within the week or so be able to confirm that date. And obviously got a bit of work to do to get it done by then. But this is going to be exciting, guys. Like, everything we already have, like version 4 is incredible. Like, you've seen it over and over again, and you're all using it. We're all still using it. But we've always known that there is another way in terms of looking for not just why price stopped there or flew through there, but more opportunities in different time zones. Because the worst thing, right, is staring at a screen for hours and not having an opportunity. Well, there's way more opportunities. And when Dad said 2 screens, what he means is 2 time frames. So just being able to, not necessarily 2 monitors, but being able to split, having 2 time frames will make a huge difference. And I'm pretty sure everyone's able to do that anyway. So if anything, take this as your notice to, if you're still running off a laptop, I love seeing the comments in the chat, Dylan and Asha yesterday or day before, about getting a bigger screen. When you get a bigger screen, guys, if you're still doing this on a laptop, just ask yourself how far do you want to go with this. and figure out a way, because for a couple $100 you could find a bigger monitor, and that'll be the biggest shift, is just having more real estate in front of you, especially if you're looking at 2 time frames at once. So figure out a way to get a second screen if you haven't got one already, or get a bigger one. But otherwise, I'm just catching up with all the comments right here. Yeah, I was about to say 28. There we go, Dylan. Yep. Man, this is going to be a lot of fun. 2026 is, guys, 2025 was a huge year for us, obviously. Like, we put a ton of work into getting through all the way to even version 4 and developing as a community, as a strategy, as a brand, all those things. But this is going to absolutely take over. Like, there is nothing else like this, and we just can't wait for you to all have it. But we're taking our time to also make sure that when we put this thing out there, it is refined, battle tested, and ready for everyone to crush it. So you can imagine what it's like when you're developing something and you're putting in someone else's hands and they're risking their money on it. So we don't take this lightly at all. Dad spends a silly amount of time back testing. Pretty much every time my phone rings and I see his name, I know that's what he's doing, and he wants to share something with me. But guys, we are almost at 9. Thanks, Kylie. TNT Dynamite. Yep, this is going to be awesome. So for now, keep doing what we're very intentional too. Like, even in all the trainings between now and then, we are making sure, like tonight, rejection of a level, rejection of a line, everything that we're teaching between now and putting this in your hands is not going to be a waste. It is still going to be very much applicable into the new as well. So stay tuned on Tuesdays. And also, we're back on Thursday morning for a live analysis. So
5:30 a.m.
5:30 a.m. this Thursday. We'll drop a link in the chat. And I'm also going to complete that book, because I'd love for you guys to be able to read that as well before it ends up as something on the internet for people. And we'll have to get your feedback on it. Maybe another week or so on that for me to do some final formatting. But otherwise, Dad, any final thoughts from you, or any questions potentially, or encouragements, or anything from the chat? I can just see all the comments are flying. I love it. Really appreciate it, guys. Really, really appreciate it. Otherwise,
I'm excited for our community. Because I can see there's going to be a lot more people posting a lot more wins. That's what I see, and just the opportunity. I don't want to give too much away now, but there are just so many more opportunities. What got me on this thing was all the pips left on the table. We've only been trading one way. So, for example, and it's not wrong. That's how everyone trades, one way. But this is trading both ways, up and down. And there are a lot of what we would in the old language call counter trend are actually perfectly safe trades. But we've been brainwashed into trading one way. So there's going to be so much more opportunities. And I'll say this other thing. I didn't ever like trading in the evening. This makes trading like the London Open in the evening 100 times easier. I tell you what, this is a game changer for trading in the evening.
Rephrase that, for trading later in the day.
Later in the day, yes. It depends. So I was thinking New Zealand, so later in the day. So
later into the session. So since the day opens and then all the way, anyway. Because not everyone likes getting up crazy early if you're on this side of the world for New York volume.
This will make, if you're not a morning person, it makes trading in the evening, New Zealand time, the London Open, which is, 7 o'clock in winter, our winter, 9 o'clock in summer. The moves start at 5 in winter, 7 like today. At 7, there was a massive move. We always say, what's the charts at 7 in winter in New Zealand? So anyway, that makes it a lot more easier. So you can, if you don't get your pips in the morning, trade in the evening, it's going to be so much easier.
Yeah, and just to confirm, Tim, for all symbols, Dad, basically gold, Bitcoin, NAS, etc.
Yes, everything. Yeah, it works.
I mean, that text you were reading out before that you sent me, I'm pretty sure there were results for all 3 on there. You were you punched me out. You just read one of them.
Similar results. I just gave you the Dow. I mean, the NAS, just on that morning, there were 14 trades. If you took everyone, 14 trades, 10 wins, there was 624 in wins, 136 in losses, and 488 pips. But that's taking every single trade.
Blindly, taking every single one.
Version 4, I've got to say, was pitiful. There were only 4 signals on the Dow, 2 on the NAS, and the net pips for both were like 150 as opposed to 1,500. So we're talking about 10. There were 10 times as many pips, which is crazy.
And cycling back, I suppose, to we've always in all things TrendForce traded with the trend, because yet we've realized in history that is the safest way to trade. And our internal thesis in that has been we want to create a safe place for people to be able to trade. We have traded other ways. The very first strategy I ever learned involved divergence, rejections, and crazy. You could be going up, you could be going down the next moment. And it just had nothing even near what TrendForce has today on it. And it was just too risky. It wasn't something that we were able to replicate safely or advance, should we say. Like there was nothing in that we were able to build upon. It was just dangerous. And so hence why we have reverted to just the safest way possible, being with the trend. But now that we're able to do other things safely, you're going to be able to go up and down and in between all these wonderful levels. So that's probably more than enough for now. But guys, be patient with us. Pray for us, because we got a lot of work to do to get this thing into your hands, and we really do want to do that as fast as possible. And the 28th is what we're looking at. So for now, pencil in Saturday the 28th. We will confirm it within the next week or so, but it'll be a lot of fun to spend some time together, pretty much half a day at least. Maybe have some lunch, and then at the same time roll into the afternoon so that we can be done rather earlier than later, so that people can get back to where they came from. But otherwise, thanks everyone for being here today. The first one for 2026. Huge turnout tonight. I don't know, some of you, it's very, very early and all sorts of hours in the morning in different parts of the world. But otherwise, stay tuned, stay active in that chat, and we'll see you for Thursday morning live analysis, and can't wait to see as many of you in person as possible on the 28th. So otherwise, trade safe, and we'll see you soon. Thanks, Dad. Thanks, everyone.
Guys,
good night.
Thanks, Ty. Thanks, Tim.